Yeah, you see here we got this right over here. So with this gap down in the market today, first of all, we can't short into the hole. We've learned the last few times that when the market kind of spikes down like that at the open, it doesn't do us any good to kind of chase down the shorts. So we've got to be just like really mindful of the location over here. We're just stuck in a little bit of a range. So this is a 15-minute chart on the QQQs. You're stuck in about a 4 or 5 day range. And once this range, so if you've noticed, large cap stocks, momentum stocks, tech stocks have been very choppy. If you've been trading breakouts and you've been like getting into failed breakouts, like you see an intraday pattern, you're like, fuck, it didn't work. That's what happens when you get stuck in a range. Like if you've been kind of feeling like the last couple of weeks breakouts haven't been working, like buying strength or things that you were doing when the market was in this kind of mode, that is actually a natural thing that happens. Like the ascent of this overall market has changed. Now we're entering into a little bit more of a consolidation phase, right? Markets don't just go up forever. They have different phases in the market cycle that you have to be paying attention to. And right now we're just stuck in a range. And so it's going to be a little bit choppy for the next few days till this range starts to break. If you're like a swing trader, you probably see like your swing trades will look ugly, and then all of a sudden they look hot, then they look hot, and then all of a sudden they look ugly. And the same thing's been happening on the day trading side. You see one day, like yesterday, all of a sudden, like all these tech stocks just started to rip, right? But like a couple days before, like none of them, like all these tech stocks just started to rip yesterday. And then, the handful of days before, they were just like farting around, and it was really, really tricky. So you want to be just kind of mindful of where the location is in terms of what's going on. In the meantime, we are in earnings season. During earnings season, individual stocks that have news out will move regardless to what's happening, into the market. So you've got you've got all these PRs happening. So this Candy Man. I'm a candy man. 'Tis the season for $2 stocks to, go to 20 and then come dying down. This is probably one of them. Can you play something like this? Yeah, sure. I mean, you've got more than enough volume to do it. It's got 15 million shares in volume. When you have 15 million shares in volume, then, you have a chance. Now, you don't want to, just chase this thing up. So, if you have a small cap stock or something like that, by the way, I plan on not trading this because, I have better things to do with my life than this kind of stress. But if you did want to trade something like this, so you got a 42 million share float on this. It's only like a $200 million market cap. So this is like, if you take like 5 McDonald's, put them on a street, that's what the market cap of this candy tech is. How do you want to trade something like this? What you want to do is you don't want to chase it up. So, if you see, yesterday with, kind of Kodak, this is, your kind of classic opening range setup. And what I mean by that is, see, the gap on this was, 100%, right? So, a lot of times, if it's up 100%, you can't just buy it blindly. So, what you need to be doing is, you want to wait for some type of consolidation. Let these EMA, see how the 9 EMA actually start tightening up on here? I mean, it's not fully tight, but you got enough where it's starting to catch up. Once that happens, then now okay, I've tightened up my range a little bit. And then, when the opening range starts to take off, you can start, looking at this for the upside. And you can really start digging in even before it gets there around the VWAP. That'll get you in. But that keeps you in from, chasing something, like a Candy Man or something like that, Like I said, I ain't going to plan on trading it, but maybe, maybe I dust off my, boots and give it a whirl. Home's got earnings. The Home Group expects fiscal Q2 earnings, net income of at least $82 million. Yeah, that reads pretty good. You only got a 13 million share float on this bad boy. $13 stock. Doesn't have too much. It's got enough liquidity right now. 500,000 shares. I would add that. If you look here on Home, you got about 16% of the float is short, so that's pretty good too. You're going to have, a little bit of short covering. I think you'll have, a nice little pizza party on that. Yeah, this Blink was another one. This thing is starting to go. Now, this is too parabolic for me, meaning It's not just about how much a stock is up, but it's about how many days it's up. When you start getting into like day 3, day 4, 1, 2, 3, this is day 4. When you start getting into day 4 moves, so you may have like a stock like Kodak, you think, it's up a lot, but it's only day 1 of the move or day 2 of the move. You still have room to go. But once you start getting into day 4, day 5 of a move, then you start to get a little bit what we call long in the tooth, short in the cock. Meaning that it can just come and, pull back or chop around a little bit. So this one will be a little bit more tricky. As you get up in the days, you're going to have more and more choppiness and more fake outs. If you want to play like electric something, it's better to probably go with some of the ones that haven't moved yet. So, you got like, things like Nio. And this one's a little bit more of a grinder, but it's okay. Workhorse has been consolidating for quite some time. You got SPAC. SPAC is another one that, maybe gets picked up. So you got a couple of these things that have been sitting on the sidelines that may start to go, with like the Candyman and Blink and so on and so forth. So all we got to do is just be mindful, make out lists, right? A big part of being trading is organized and, oh boy. APA, what do you think about this bad boy? See, up 13% on earnings, smaller than expected Q2 loss, revenue beats estimates, blah, blah, blah. That, oil stocks are a little bit tricky. I'd probably stay away from oils. They're always notorious. Qualcomm. Qualcomm's got a big all-time high breakout. Now, this is probably, like, you got an all-time high breakout. Like, this is not bad. Like, you've got yourself a nice kind of all-time... When you break out the all-time highs and you're a tech company like semis, these kind of stocks can go. This will be a little bit of a grinder. So you got to be just somewhat careful. Like, when you have like a billion share float stock, you're not going to move necessarily too clean, but it can be played. Like the setup you'd be looking for is like something like an AMD. Yeah, see, like you broke out on earnings yesterday. So it popped up to 77 at the open, like you pulled back to the 9. As soon as it starts to hold there, like you can take that type of trade and push it up. I'd add Qualcomm to the list. UCTT. Clean tech. So clean tech has actually been hot. If you think about like solar and everything that's been going, opens up manufacturing facility Malaysia, holdings higher, UP, 26 million share float. It's $1 billion company. Man, you got a decent looking kind of breakout over here. I would actually add this to the list. There's not much volume on it yet. 8.4 million shares. We'd have to see how it starts to come in. Most days it does get close to 1 million. I'd add that for now, but it's not an A+ due to the fact we don't know what the liquidity is like. If this thing fires off like 500,000 shares at the open, I think we'll be good to go on this bad boy. Just got to make sure there's some liquidity in it. Alex, this thing never moves. INO's got some news out today. It's already faded off its news. I'd be kind of mindful of this one. I don't think this is probably going to be... When they fade off this much, like right off at the bat, I don't think usually... That's usually not my cup of tea. Yeah, I'd probably leave that one. I don't think this is going to be an easy long. I do want to... We'll have to put it on watch. Frankly, I'd be watching this one for like a quick pop and then a fade off. You know, if this thing got like, if this was just a 2-candle kind of algo spike, a lot of times this can red roll. We'll have to, we'll have to watch this thing. If it loses this level, and I don't know if it's going to, that's where we want to watch. If this thing goes green to red and loses this level at the 50 SMA, you've got some room to fall here. You don't have any support down until you're in the 10, 12 range. Add that. That's top of the list for us. QRVO. Frankly, we're not rising 9%. Hey, this is a breakout to ATH2. Only 114 million share float on this. Semiconductors have been hot. So when you think about semis, like this type of action has been, I mean, it's been working. I'd add that to the list here. See if it holds this 120 at the open. If it holds this 120 at the open, we'll look at this for potential ORB or some type of quick pullback buy. It's not that sexy of a name, but it is. Good. What do we got on the downside? BEP. Never heard of BEP. Pass. Utilities, retail stocks stink to trade. Brookfield Renewable Solar Project, blah, blah, blah. I didn't even see the news on this. But retail stocks suck to trade and utility stocks stuck to trade. TSE junk. Junk. What do you guys think about the These are all Latin American oil companies. No good. Tupperware brands, blah, blah, blah. Man, I was hoping to get a short on this Tupperware. I actually do think Tupperware is probably a short. This thing was like at $1. You're running at 16 bucks here. I'd watch for any kind of pop into this. It's already down about 7%. If you get a pop back into the 16s, like I would add this for a potential short. I think we'll double top on this thing, and it's got a long way to drizzle down. You know, Tupperware parties, they're fun. They're sexy. Everybody's mother likes to do them, but they're so 90s. All right, so that's all. I mean, I don't see anything else for hot earnings plays like Cheesecake Factory, no good. So let's talk about like just a regular watch list. Let me see. What's with you guys on these EDSA? Yes, you can play this. It's up 200%. If you guys want to, dicker and deal on these kind of names, you can. This is the season to do it. Like if you're ever going to take a shot at blowing up your account or making a shitload of money, this is the season to do it. But it's not going to be, they're never as easy as they look on the Twitter when, people post their $100,000 photoshopped, $100,000 photoshopped P&Ls. This thing is a breakout. You can roll with this thing. You just got to wait for a pattern, Most people, they don't know how to manage their risk or wait for proper patterns, and that's why they get smoked out of this. If you got a nice basing pattern or something like that, like, you can see like kind of like on end of day on Kodak, you can do, this is like the easiest type of pattern to do on like these kind of small names. Like after they come, after they pull back, if they're starting to kind of rip and ride on that VWAP and they start to hold, then you can kind of play them for, that push to the upside. And, that's like a much easier play than trying to like catch it right at the open. Now let's talk about the regular watch list. FSLY, you've got a range break over here. If this thing kind of breaks this 85, 86 range here, I think this one starts to really push. It had a nice day yesterday. You got a rounding bottom pattern on it. I actually like the fact that it's gapping down 1.5%. It'll give us a chance to go red to green on this thing. Docu's another one that I think is like an imminent breakout over here. You've got yourself a nice kind of triple tap breakout here. I'm thinking this thing busts loose to all-time highs very soon. You've got a trend line break on the 15-minute. As long as it can miraculate right around that 204 spot, I think you're going to have a good shot at this one. It looks pretty good. Hold on here. Hold on, little mama. Survey Monkey. You know, this has got a nice swing look to it. I've been just spying on this one. I almost added it yesterday. It's got a good all-time high breakout look. I've got yourself a nice looker over there. All right. Etsy. This thing's a heater. So, you know, Etsy in general, if you look here, you had this big push from 75 to 115. Now you're starting to really hold at like this 100 spot. You finally remounted over that 20 SMA that have been holding it down. And now you're starting to break out of this range over here. If this thing holds up today, I think you're going to see this thing at 115 pretty quickly. It's a good looking stock. It actually moves pretty well for, you know, it's a retail company, but it's an online. Yeah, add that to the list. Penn was hot to trot yesterday. Now, one thing with Penn is it doesn't often have like follow-through days. And what I mean by like follow-through days is you'll often see it with like a big day, and then like the next day, see like this day it had this monster cock run. I'm sorry. It was monster run. And then the next day it was just smoked out. We'll see what happens today. It's actually pulling back into support here. If it can hold here, if it holds here 35.36, I think we try to bounce this thing, you know, get this thing back into the range. This is an imminent breakout happening here. You know, you've got a triple tapper breakout here at 40. As long as the market doesn't get smoked out, this thing is going to break out at some point. Relatively, you know, in the next week or two. As long as it can hold over this trend line, now what you'll start to do is back and fill into this area. And as it backs and fills into this, you'll start to see it push through the 39. I do like the overall look of it. Yeah, Donkey Kong looks okay. Not if it's gonna have to come out of this range. That's not a priority for me today. That's the list. I'm sticking to it. We got these gappers. Add OSTK, obviously, to the list. You got OSTK, INO. Good. Etsy, Docu, FSLY. Those are the faves. I'm sticking to it. Man, Alt is probably due for a bounce, but I don't have a pattern per se on it. Besides that, it is oversold. You know, oversold is one component of a bounce. I don't have necessarily a pattern on it yet. It is there. It's hanging though. HCAC looks okay. All these kind of spacky companies at some point will get picked up again, but this thing is very light in volume. Yes, Squarespace is nice too. I should have added that to the list. I just got a vendetta against this thing. It is a nice stock. Good. Yes, Squarespace is a nice breakout. Frankly, if it breaks out here, you have earnings. I would say it looks like a swing trade, but the earnings are on the 5th, so you can't really swing it. But it does look pretty good. That's a good-looking list. That's our list. I'm sticking to it, Mr. Boyanan. Long term, you don't want to short Netflix. It's on too much support. not me personally. It's actually looking like it could be maybe a bounce. If it gets closer to 460, I'd be looking at that for a potential bounce. Because when you're getting grinding down into this, it'll start to get oversold. Oh, yeah. And then you're going to have yourself a little pizza party. All right, that's the list. I'm sticking to it. Stay away from the Kodak today. It's going to be choppy. Yesterday was the day to make money on it. Now all these bounces are going to be dead cat bounces. What that means is it's a sucker's bounce. It's a sucker's bounce. Get some retail people in so that the smart people can sell you their shares. So if you want to buy somebody else's shares, that's right. Like it's like after you hook up with the girl and your buddy's like, yeah, took her down last week. Not that cool. Cool. That's the list. We're sticking to it.